Hello everyone, and today we're going to go over my challenge. I have my slush fund account in front of me. You are seeing a live trading account. Let me make sure this is set up. Okay, you're actually seeing a live trading account. It's not a demo account, and a bit risky showing people my live account. It's not really that risky. It just sort of unveils exactly what's going on, I guess. Now, full transparency, this is what I call my slush fund. I have another brokerage account, and I also have a constant recurrence payment into a diversified ETF portfolio, pretty similar to your superannuation, or in America, God knows what you call it, 401k or something like that. So I've got that as well. This is my I don't care if I fucking lose everything account. So what happened is a couple of years ago, I brought a small piece of gold. I'll speed run this story and we'll get into this video. I had a small piece of gold. I bought it for 1,000. It was about 1,800 US dollars, because I remember buying 1 ounce, and at that time, I think this was kind of pre-COVID-ish, 2019, early 2020, something like that. It was about 1,800 US an ounce. So I bought a little bit of gold, like not a stock, not an ETF. I just bought a chunk of gold, right? An ounce from our local mint called the Perth Mint. I held it for like a year, 2 years. Gold went up in value. I thought, sweet, I'm going to sell. In Australian dollars, I mean 1,800 US, probably like 2,500 Australian. Anyway, sell. I had about a $500 profit, and I went and sold thinking I'm some sort of genius. As we've seen, the gold price today is way up from there. I sold at about 2,500 US ounces. That was the price of gold at the time. Long story short, I made about a $500 profit. That brought me to about 2,500-ish. And if we go back, like I said, I held it for a couple of years and sold it. And then I dumped it into here. Now, this is when I started getting into options and like reading all the books and learning the Greeks and all that. I got into options trading, and I was trading nilly-willy, all sorts of things. And you can see, zoom in a little bit, I started with about 2,200 and we went up a little bit to about 2,600, right? I lost a little bit of money. Like I remember making about 2002, about $400 profit, and I was like, well, for a small account, I was like, sweet, this is Australian dollars, by the way. I was like, cool, this is a nice little return. I got spooked because I lost a bit of money on a trade, and I remember withdrawing everything, like, yeah, a bit too advanced for me. I put it into another brokerage account, and I just bought shares in a Australian stock called Raise RZI. I got it nice and cheap at about 38 cents or something like that. And it made a little bit of money. I don't even know. This isn't rational anyway. I then deposited back into this account after I'd turned over a little bit of profit. I made about $1,000, dumped it back in here, traded options again for a little bit. Not really too much success, lost some money, whatever. And I thought, I've had enough. I dumped it back into the same stock called Raise, about 3,400 something dollars worth. Fast forward a couple of years. We're into here. Still holding Raise, Raise drop, still holding Raise. Here I sold Raise and turned a profit of about $5,385. I then said, you know what, I'm going to get back into options trading. In that time, I'm doing a maths and stats degree. I've just completed my first year. I've read however many books on derivatives and options there is there. So I thought, I'm going to deploy some more advanced option strategies. So I did do that, and we went on a bit of a wild run. We went up, down, we went up to the peak of about, and this is in a short amount of time, so I'll close this window a little bit further. We peaked at about 11,300. Let's go performance so we can sort of see the returns. Yeah, so the problem is if I do, my interactive brokers is weird because I don't know why it drops off like that and never returns, because that's not accurate. But if you narrow in for the year, just say year to date. Is that year to date? No, that's not year to date. But anyway, so here we are. Trying to figure out where we're at. About here, I think. December? No, it was more out here. Yeah. At this point here in April, I sold my raised shares and I just went all on options trading. And I was doing every single strategy you can possibly think of. Iron condors, butterflies, credit spreads, debit spreads, options over earnings, just long call options, just everything, man. And I was just trying to... I came to the conclusion, I don't care if I lose this money. I'm going to trade options until I'm a master. So I did, and I got on a bit of a good little run doing a lot of calendar trades. As you can see at my peak here, I got up to 123% return and then quickly plummeted when the whole Trump-Iran situation and blew up my options trades. And then about here, I decided let's just get back into buying some good companies, doing some good due diligence, still using some options, but let's take this a little bit seriously. And that's where we are today, and that's what I have been doing, and we're back up to about 100% return this year. And the title of this video is going to be turning. I did technically start with 2,500 Australian, and if you want to know the conversion, if you over divided by, if you multiply 100 US dollars by 1.5, you'll then get Australian dollars. Figure that out. And I'm supposed to be a mathematician too, so. Anyway, so I'm about 10,000 Australian now. So the title of this video is going to be, can we turn 2,500 Australian dollars into 100,000, a million, whatever, by trading? Is it possible? And keep in mind that this is, I do not care if I lose a count. So I think this is fun if you are fully content with losing this. If I lost, my max loss would be 2.5 grand. My more responsible investments are in a completely different account. So let's keep that in mind. So the risks I'm taking may not be the risks you should take with your hard-earned saved money. All right, glad we got that off our chest. So what am I doing today? Today, I'm trying to look for a new investment. I have some ideas and I want to share this journey with you guys, and we might be able to do things together. I've got some ideas I want to get into. Let's cover my current portfolio so we have full transparency. You'll notice I'm currently leveraged a little bit. It's quite funny. Like, I mean, when you're not really too phased about losing, you kind of don't really care. But I do try to keep my leverage in check. I'm trying to keep a fixed amount, but it should be a percentage, I know. But I'm trying to keep at least 5 grand of maintenance margin in my account. You still see I've got some excess liquidity there. The numbers look different on my phone. That's the weird thing about this. But basically, my official account size, if I sold everything today, is about $10,420. And about 3,100 of realized gains, well, unrealized. But if I realize them, whatever. But my full count position size is about $18,000 at the moment. And I'm trying to think how you add that up. I think you add that and add that, or something like that. But I don't know why my app says something different, but it's close enough. It'll say it somewhere. Anyway, forget it. Looking for a new investment. Previous investments, what I'm in, full disclosure, I bought Reddit just before their last earnings. If you've been following Reddit, obviously that paid off nicely for me. So I'm still holding Reddit. We're up 43.8% on Reddit. I own 26 shares of Reddit. The position size is about, this is in US dollars. This is what's always confusing. Can I change? So on my phone app, I can change it to Australian dollars, because the problem is my returns on the left is Aussie dollars, but these are US stocks, so the returns are US dollars here. I'm not going to mess around doing it in this video. Anyway, I would just like it all be in Aussie dollars so you can see, but this is US dollars. So this return here is actually more close to 2,500, something like that. Anyway, look at the percentage, 43%. I bought UNH at its complete bottom before Buffett announced that he had some shares. Pure luck, this one. Honestly, I didn't do too much due diligence on this. I've done a bit more on Reddit. This is kind of a luck play. That's why I didn't go in much. You can see it's only like $1,000 position on entry. So the confidence wasn't there too much. SPY, I've just been buying the dip on SPY. Buy the dip, bro. So SPY, basically, when I get a decent dip, I buy them. I brought it. We had a little dip when Israel-Iran kicked off, so bought a couple of shares there. My plan with SPY is just every time there's a crash or a decent dip, I'm going to top up. That's it. There's no hardcore strategy with SPY shares. That's just my long-term gameplay. Apple, I thought Apple was undervalued, saying that with caution. It's probably still really overvalued in a lot of people's eyes. I thought it was undervalued compared to a lot of these other tech companies that have taken off. So, brought a position in Apple. The next week, what's the Apple CEO's name? Steve Cook, something like that. Went into Trump's office, the Oval Office, and bribed him with some fucking stupid glass gold looking thing. And the stock jumped 5%. So cool, good for me. Thank you for bribing Trump. I mean, is that what you got to do these days to save your company, is to kiss Trump's ass? Who knows? I'm not going to get political here. Seems like it though. So anyway, they're doing too well, 43%. And this is all within, I started doing this about two months ago. So this is all pretty new gains, which I'm quite impressed with. 43%, 25%, 6% on SPY, 6% on Apple. All right, calendar spreads. You know how I was saying I was doing all that crazy option trading 6 or so months ago? Trying everything. I found something good. Calendar spreads nice and tight on specific days. Those days are a Friday and a Monday. It works good. I done about a 2,000, then 1,000, then 1,000, all in 3 weeks in a row profit. Short-term trades too. And then I got stung bad because I was peddling SPY calendars like crazy, and I was probably just going overboard, not keeping my position sizing in mind. I'm still tinkering with this. It's doing well. I keep it small. I'm risking 131, 192, and 62. I'm not risking that much. I do a tight calendar spread, so that I go short on a Friday, long on a Monday, same strike, and same type. So both calls or both puts, doesn't matter. And I've decided to play around with trying it on GLD, SPY, and Tilt, because they're not really that correlated. And I was just kind of thinking, so calendar spread, you want a range. You want the stock or the ETF to stay within a range, and then you're going to make some money. And I thought, will I spread out my chances if I do it over three? You need liquidity as well. 3 big ETFs that aren't as correlated as much. So we've got gold, we got SPY, the S&P 500, and we've got Tilt, which is an ETF for T-bills or government bonds or something like that. So still trial and error. This is my second week. The third week profited okay. I didn't lose any money. I made about $50, but I think I only risked at 100, which is a 50% return. So keeping it nice and tight and small. I went a little bit bigger this week around. I've stacked it up to 5 contracts on gold and SPY and 10 on Tilt. I've tried to stack it up a little bit. Let's see how that goes. That could be something interesting. We can keep going. Imagine if we can keep that every week, bang, 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 couple $100 here and there, while these long-term plays sort of play out. AMD, I've been buying AMD. It did break even the other day. Now it's dropped back down again. 13 shares, about a 2,200 US dollar position, which is about a 3,400 Australian dollar position. Been buying that a little bit, just been buying the dip. Neither here nor there. I want a new investment. Even though I'm already digging into some margin, I think my leverage is 1.8. I don't want to push it too much because if there's a crash, I could be forced to liquidate some stocks. But hopefully, if that happens, I'll probably liquidate Reddit. Because I can up 43%, I can sell. But it's a slush fund. I mean, who cares at the end of the day? It'll be fun while it lasted. Yeah, so I have $5,000 to dig into, but you got to understand, if I use that 4 or 5 grand, my portfolio drops 1%, I get liquidated. Not good. So anyway, neither here nor there. I'm looking for a new investment, and I have an idea, and I'm going to share it with you guys. My play is, yeah, I had some problems with my camera. Okay, so I want to do a play. I've been thinking about this for a while. I want to do a uranium play. What do I mean by uranium? Well, nuclear energy. I have a theory. Don't know if I'm right or if I'm wrong, but I just have an idea, and it could be called a loony bin. This idea is the world needs more energy, and it's only going to increase. I feel like the world is going to be forced into nuclear, whether countries like it or not, at some point. That's my opinion. It might not be yours. We all know nuclear energy is one of the most efficient energy sources out there. Comes with obviously its problems, but I'm meaning like the best bang for your buck when it comes to energy by a long shot, right? And I just have this thing where I feel like countries, whether they like it or not, are going to be forced, could be 10, 20, 15 years, into doing something with nuclear energy. I think it's going to push up the price of uranium, the price of any stock that has to do with anything with nuclear. So I'm looking for the best, most leveraged play on nuclear energy. That's my plan, and I want to get a position on something. So we're going to go through it. ChatGPT, welcome, come to daddy. All right, so there's a few things you can do. The most basic play, right, is just to buy a uranium ETF, or just to buy the commodity uranium. Boring. The next play would be to uranium miners is a good one. Problem with uranium miners. Once uranium price goes up, it's good, but that enforces all these other small cap and people that are thinking about opening a uranium mine to come to the party. And then once production has raised up across the board, it then levels out again. The whole supply and demand, okay? Well, that could be true for anything, but I kind of don't want miners. To me, I live in Australia, I'm in Perth, I work in the mining industry. Mining is so unpredictable. It's bankruptcy, it's high times, it's low times, just like oil. So I'm not a fan of that either. I wanted more focus on something to do with the nuclear power plants themselves. And that's when I learnt about the SMR, small modular reactors, I think it's called. Why is that all funny? Okay, SMR is a nuclear power stands for small modular reactors. Yes, I want to get into small modular reactors. These are starting to come into play. Like, there's some interesting things, and it's like they're built in like a production line, and I'm going to simplify this, they can clip them together basically. Number one, setting up a nuclear power plant costs sometimes hundreds of billions of dollars. They can do this, these small modular reactors, for a tenth of the price. There's other things that come with this. It's proven that the output, the best bang for your buck, is better. It's more high tech. The chances of having nuclear disasters is smaller. I mean, let's just read through a few. Chat GPT, make this smaller. Give me a very so we just want a quick comparison. So what does SMRs bring to the table versus traditional nuclear reactors? So we've got lower upfront costs, cheaper to build than gigawatt scale plants, faster construction. It can be done in a few years. The other thing with nuclear power plants, they can take 10, 15 years to build. This is a couple of years and they can bang them together. Scalable, add nuclear reactors as demand grows instead of committing to a giant plant. I'm just thinking Legoland, you're clipping them on. I know that's not how it works. Enhanced safety, passive safety systems, lower meltdown risk, flexible use, can power small grids, remote sites, or support hydrogen desalination. Reduce financial risk. Smaller projects attracts more investors. I want some fucking numbers, chat. Give me some numbers. What's some numbers? Yeah, SMR capacity. Our typical range is between 50 to 300 megawatts per module, whereas traditional usually 1,000 watts per module. For instance, NuScale SMR offers 60 megawatt per module and can scale to 720 plant with 12 modules. Rolls-Royce SMR has involved in integrated performance modules. Capital cost. Okay, so the SMR capital cost, here's what we want, the meat of the situation, 2,653 per kilowatt, compared to 4,764 per kilowatt for a typical PWR. PWR is probably traditional. According to IE, SMRs cost around 10,000 kilowatt. May cost around outrace and retrans. Yeah, in Australia, I don't care about Australia. Okay, low cost. So basically, you get the gist of it. If these work and they're proven and they're good, you're looking at a radical change in the nuclear power industry. SMR 114 megawatt per minute. The cost capacity is pretty much half. High-end capital costs up to 10,2,800. Traditional. Don't know what LCOE. I need to learn this a bit more if I'm going to invest. But anyway, fuel cost consumption, module capacity. While SMRs can lower absolute upfront cost per unit and offer module scalable deployment, they often face higher per kilowatt capital costs, higher fuel costs, and lost economies of scale. That said, they may benefit from faster construction, a smaller footprint, and flexible for certain applications. But overall, this remains uncertain. Okay, well, maybe it's not as grand as I thought. All right, give me the best. There are some good ones that are going to be good, but aren't public, like the Rolls-Royce SMRs. So we've got a few plays. We've got NuScale Power Corporation, pure play developer. NuScale is publicly traded US company with markets. Okay, so they've received approval from US Nuclear Regulatory Commission. Scalable design. Stock in size trading around 34. The stock has rallied over 300% year to date. Fuck, we better not have missed a boat on this one. Analyst sentiments. Mixed, some holding ratings, some modest. Okay. Summary. Best choice for we want direct exposure to SMR technology by the way. Recently went public. Alright. Analyst attention. Bank of America issued a buy, setting a target of 92, implying 30% upside. Current levels driven by a strong pipeline. Have we missed? Shares surged over 1,000%. Right, every time I come up with an idea and then I look, I seem to have missed the boat. Maybe not. Section and a fast, innovative, reactive approach. Still pre-commercial for no revenue. No. BWRX, but not publicly traded. Well, I want it publicly traded. Well, it looks like, because we want direct, so it looks like we've got this stock here. All right. And Oklo. I want the ticker too. Give me the ticker. Okay, so SMR and OKLA. All right, so we've got some pros and cons. Let's bring up the stock. Let's look at SMR first. They do have the superior ticker because their ticker is literally what they are. So this is, yep, SMR, 1 day bars. Scroll back. So they went public in 2021. Fuck, have we missed a boat? Look at that. Let's see how much of a boat we've missed. So let's level that off. We'll go about there, it will be reasonable. So the height was about 455%, but that's not it. Hey, we've retraced. We've retraced. We could have an entry point. Could have an entry point. I mean, at least I can say I'm not buying at all-time highs. That's not that bad of an entry. If this is the stock, right now wouldn't be that bad of an entry. Because you although it shouldn't matter, right? You have your valuation and prediction for a stock. If you think it's good, you buy no matter the share price. There's just something funnier just about buying at all-time highs where it doesn't really sit comfortable. I like to buy when the price has sort of been decimated a bit, within reason. So if this is okay, I don't know if this is a stock I want to go with. An entry around now might be okay, might be alright. Right. Well, now let's read up on SMR. Read the letter. The only US company with NRC certified. Okay, that's an advantage right there. That is an advantage. Module was approved and so recently approved. So did it shoot up after that? May 2029? 29th of May. Not really. Okay, well maybe they found it. It was around that time. Yeah, we had a huge jump. 17% and 19%. And that's kind of taken off since. Could be the play. Okay, so they have some federal approval. Modular and scalable, utilizes lightweight reactors, can stack 4 units. Man, I love the sound of these SMRs. I'd love to see one. Strong partnership and positioning, gaining traction from large tech players. Growing momentum. Q1's earnings surpassed positively being yeah, what is the revenue? Are they making money already? Oh no, so they're still losing money because the earnings per share is still down, but making 10 mil already is 11 mil. You know why it's still kind of early days? Because they haven't turned a profit yet. If this does get off the ground, does get working, they start turning a profit, we are looking at some exponential returns here. Gaining traction from tech players. Okay, growing momentum. Earnings surpass positively being revenue expectations, achieving cost efficiency, and fewer investing stock rose. Valuation edge, more reasonable PB ratio of 19x compared to, oh fuck, Oculus is 29x rating. Yeah, so that maybe that one's, it could be for a reason though, making it relatively cheaper per book value. Financial Federation, despite previous project cancellation, high cost, new scales, approved design, still positions from its firmer ground. Okay, cons. Project uncertainty. A major project ramps up on scale due to 9 billion for 6 modules and declining, not good. Development tag. To approve, there is still no operational. How they fucking making money if there's no operational plant? Though approved, there is still no operational plant. I'll ask chat that question coming up in a second. Deployment hinged on consumer uptake and timely. Well, maybe they've made some sales of like promise to sell. I don't know. They're still getting made, and some companies have paid them money already for future plant. Okay. Industry skepticism, like SMRs, new scale faces criticism about potentially higher costs. There's still some problems. Not a perfect investment, but here is my idea coming to tuition. Pros, radical innovation, develop using, come back fast, can run 10 years without refueling and can recycle used nuclear fuel. I like the sounds of that. High profile backing supported by Sam Altman. There's your sort of wow factor. I mean, I don't give a fuck about who's investing in what. If it's a good company and you want to invest in it, but you got to think about, do other Deegan investors want to invest in something? And if for other people, they might see a name like Sam Altman and they might want to invest just on that alone without doing any research, which pushes up the stock price for you. So although it should be irrelevant, there's something there. OpenAI. Investors from OpenAI Excel elites raising both capital, major contracts, secured a microreactor deal with US Air Force for deployment in Alaskan base. Under significant upside potential. Strong element sentiment. Risk adjusted. Well, this. Why is that a positive? A negative 69 versus a negative 87 drawdown. That's not what I want. Cohen's pre-commercial and making loss. No revenue yet. Q2 loss of 28 million. Not good. NRC previously denied its license application due to lack of info. That is not good either. Trades at a steep 29x isn't good either. Execution risk. Yeah, okay. If you prefer lower risk exposure with proven regulatory groundwork and alignment with established energy decarbon trend, SMR is the steadier pick. If you're seeking high reward upside, backing cutting edge technology partnership. I'm leaning towards SMR. Let's look at OKLO. Fucking hell, that is taken off, isn't it? Why didn't we come up with this back in 2023, honestly? Look at those returns. Oh man, I just got a feeling that this OKLO is a lot of hype gone into it when SMR has already regulatory approval. Both losing money. And if we get in here, we are getting in near all-time highs. It's quite shaky ground, isn't it? Stock 1,000 rally, hiding. You know, a play would just be diversify gains of both. It seems like these are only two plays anyway. Like, if we want to get into SMRs. Stop fucking around, Church. We just pick. If you had to pick one, it would be SMR. Why? It has, yeah, the SRC approval. The approval is a big thing. It's a huge hurdle to cross. And it's a reasonable valuation. It already has industry. There's exciting futuristic, could be a 10x moonshot. Speaking my language, chat. But it's still pre-revenue. As you know, I can't spell. That's why I'm doing a mathematics degree, because I cannot fucking spell to save the life of me. Here's what most does. 2030. Q1 showing growing revenue. Okay, so OKLO is targeting a profit a bit earlier than what SMR is, but just saying you're targeting a profit is doesn't really mean much. Like, results show growing revenue. I still like SMR. Anyway, I'm honestly leaning towards SMR. If I want to diversify, I'd go. I am leaning towards SMR, to be fair, but if you really wanted a diversified play, you could go both. Another thing is, what's the market cap? Why does it always give me this shit? I don't fucking care. Just give me an answer. Give me a market cap. Multiple sources. Same with the market cap is just the shares times the share price. So I don't even need to search that. What is the market cap now? You don't need to estimate market cap. It's how many shares, the total float, times the share price. So why are you giving me an estimate? Anyway, it looks like that honestly the same. Basically 10 billion, right? And if one has a 29x forward earnings valuation and one only has a 19, why wouldn't you go the 19? And the 19, meaning SMR ticker, this one here, New Scale, also has government approval, unless I'm fucking missing something. Oaklight currently holds a slight edge. Having a large market value isn't an edge. 10% higher. I think they're pretty similar investments. I might go both, but anyway, let's look. Let me log in. Give me a second. Let's look at some options, eh? Famous last words. Let's look at some options. We know shares would be the play. Give me the option chain. Because if I'm really bullish, my strategy for this, guys and girls, is I want to go long stock because it's going to be a long-term play. But I also want exponential returns. So it's probably going to be a mixture of going long stock and also buying a leap contract, which is just an option contract, a call contract that's way out into the future. And like I'm talking a year from now. Let's look at Jan 2026, 290 days. It's not even, oh, June. What are you going to charge me? Looking at about $1,000 for a call contract. I would probably, because I want exponential returns, honestly, I'd probably go out of the money. Like if I'm investing in SMR and I really, really believe it, I'm going to buy some shares today when the market opens tomorrow. And if it does go my way, I want an out the money leap contract around this sort of, in a year from now, if it really, man, is a year even enough time? Say in the 50 range, which would set me back, which would be a $625 risk. As you can see, the stock starts moving. If it does get up to that, I can't even see it. It's not giving me enough space on the graph. Anyway. It'd be something like I want to buy a call contract and mix with some shares. All right, so that's kind of, I'm going to go away and do some actual research. What you've seen me is just, I think with research, I'm going to wrap up the video in a second. People shit on ChatGPT. Now, for good reason. I'm now going to go away and actually do some proper research, looking at the balance sheets and trying to make an informed decision. The problem is there's that many companies out there to invest with. You don't want to waste time. Time is very special and limited. Trying to decide what to invest in. ChatGPT for me can help just narrow it down. So now I've got 2 players. And instead of trying to look at 50 players before ChatGPT and narrow it down, I've now narrowed it right down into 2 decisions I'm going to make. I'm either going to invest in both or one or the other. Maybe SMR, but if I find anything, I'll let you know. So I think next video, I'm going to come back with my decision. I'm going to go do some research. I'll get some bullet points for you guys, and I'm going to make a decision, and I'm going to invest. And we'll add this to our portfolio. And yeah, we'll fucking see how we go. So far, so good, but we'll see how we go. And any other ideas, I want to know about it, because I'm willing to take some risk here. So I want at least one nuclear play. Now, if you have any nuclear ideas, do let me know, because I'm really interested. I will hear you out. But I'm thinking the SMR nuclear play is where I want to put my eggs. I want to put my eggs in that basket if I'm going to do a nuclear play. And I am looking for other plays. I don't really want to hear about the AI plays, and my main reason is I'm kind of already invested in AI. I mean, I've got AMD just down here. Yeah, but willing to hear out any plays, any ideas, and we're going to see how much we can push this account. It's going to be fun. We're going to do options. I'm going to get back to you guys on how my calendar spreads are if they're working. So far so good, because we want to keep that in there as well. I also want to get into some short straddle earnings plays, because I back tested, forward tested, and done every testing you can think of. Generally they're profitable. So once every couple of months you just get absolutely ripped a new one and burnt. So we're going to do some cool stuff and some cool stocks. You're welcome to copy my portfolio if you want. No worries with that. And I'm going to be full transparent on this channel. And we're going to have a bit of fun. We're going to see how much we can stretch this account and see how much money we can make. And I hope I can come back next video and say SMR, I like the stock. But that's how it sits now. SMR, I like the stock. At the moment, I'm leaning towards a buy. I might get some shares tonight. Market's closed tonight. It's bank holiday, but I might get it tomorrow. How I usually trade is if I have an idea, even if I'm only 20% into the research, I get a small position, and I advise you to do the same. Small position where you can afford to lose. Could be 100 shares, 50 shares, whatever. Keep it small. Keep researching. If you keep researching and your ideas come to tuition and it gets better and better, add a few more shares, add a few more shares. Or if it goes the other way, sell your position. Because the market, I don't know why it watches me. When I have an idea and I don't buy shares, it goes up. Don't know why it does that. So I've always told myself, if I have an idea, invest a little bit, but keep researching. You want a little bit of skin in the game. All right, let's leave it with that. Thank you, everyone, for watching. Cool. Bye-bye.